All right, guys, so today is Thursday. You can see it's 0711 Thursday 21:54 9:54, and I'm gonna show you guys the account and show you guys what basically happened today. Today we did have CPI once more. Very bad decisions were made. Going through these trades, I'll probably go over them tomorrow, but I'm just gonna give you guys like a quick little update for Thursday, and then tomorrow if something does happen, of course, showing you and updating you again, and then showing you guys the trade for the end of the week. Basically, I don't know if I updated you guys throughout the beginning of the week, but I'll update you guys right now basically what's happening to the account. So we're down around 3.4%. We lost around 4% in one day. It was really bad in my opinion. The risk management, not staking to the one trade a day, risking 1%. We should have ended it right here. We could have probably been up 0.4 or 0.3, and we would have probably avoided the bad trades and the bad mistakes we made later on, and if we would have walked away and simply stuck to our rules and been disciplined, we would have avoided simply losing so much, eventually losing like the 4% right here in these trades. It really was those trades. It really wasn't anything else. Bad decision making, being irrational, being emotional, not really being stoic, not really being rational, not having that sense of clarity of what we should be doing and why. And that was really it, honestly. So hopefully we learned from this mistake. We had this before. We lost around like 4% in one day last month, but I'm not really trying to compare it because times are different. This is phase 2, this isn't phase 1, and back then on phase 1, whenever we lost 4%, we were already up like 3.5 or around there. So we got to get out of drawdown. We weren't really in drawdown back then. We were close to break even. This one we're in drawdown, and I'm gonna have to be very selective about my trade. I am trying to stick to that dilemma of one trade a day, 1%. But again, my thoughts usually are like, all right, if I find a good high quality setup, and if I know it's high quality, if it's like sticking to my main model, then I might risk 2% and eventually climb out of the drawdown, probably pass the account too in one trade. But I'm not really trying to think like that. I'm trying to build the buffer, stick to my rules and stick to my discipline, and I'm just simply trying to rush into it. Like my mentality right now is like, all right, if I can find that one good trade and have that 2% risk on it and pass the account while also getting out of the drawdown, that would be like killing two birds with one stone. And I want to do that, but again, it's really just like, bro, like conquering my thoughts and really understanding that there'll be opportunities present themselves along this month, and we stick to our rules and we stick to our dilemma and we climb out of the drawdown risking 1% one trade a day. Eventually, like I don't want to hit a one shot, one kill. I want to build consistency, and I want to prove to myself that I can be consistent day in and day out, week in and week out, month in and week in, month in and month out, and prove to myself that I am consistent and I am profitable even during these meltdown days or meltdown weeks, and really controlling that. That's something I like, controlling it, and after it happens, learning from this mistake. I don't want to repeat this every month. I really don't. I really want to understand what's going on and why it happens, and then fixing it and not repeating it anymore, and I feel like it has really to do with a reflection of my life, my habits, my bad habits that I've been instilling. So, but yeah, I need to really stop thinking like that. Really need to fix my thinking habits and my thinking patterns, but really my habits too. I've been journaling a lot more and trying to understand myself a little bit more, internally. You can read all the books, you can do all these things, but the best book you can have is your journal, and understanding yourself, because these books usually are spread out, they're very spread out for like a audience. You're not really specific for you and your certain situations. That's kind of why I like journaling a lot more than just reading as of right now in my timeline. Simply just provides a lot more clarity and better of an understanding of what I should be doing and what mistakes I should be avoiding, and helps me understand myself a little bit better. But yeah, that's pretty much really it. Again, I'm gonna try to stick to the 1% one trade. I'm not gonna try to risk 2%, but who knows. I'm not really gonna try to say anything, but if I do see something, who knows, I won't try to do it. I'm gonna try to stick to my rules, because if I don't right now, then of course later on when this happens, or later on when something else happens, I feel like we just won't stick to it. But that's really it, honestly. I'll update you guys tomorrow on the trades piece. Alright guys, today is Friday 7/12, and yesterday I did give you guys an update, and we're still at the same level, which is down 3%, 3.5 around there if we estimate it. And today we took a break even. Again, put it in the Telegram. I put my trade review, and I did also favor this market from the commentary, Thursday's commentary. You go watch that again. I was giving you guys my reasoning for why I like this one yesterday too. This is the only one really. It was gold. You can see that 0711 morning session. And then in the afternoon session, as you can see here, afternoon session 07. Okay, no, yeah, today's the 12th. I'm tripping. So it's the 12th. You can see 0712. And then yesterday was 0711 afternoon session. And this is Dow Jones. Dow Jones met our target. EU met our target. And then gold. Gold was one of the favorites going into that commentary. And this morning it's just super clear. I'm gonna show you guys that right now. So again, super clear. This is where our entry was, and then we got stopped out. I'll show you guys the trade review. But then EU again, same thing really. We were trying to meet this target up here, and I believe we will, but we just didn't really have a 4-hour confluence going into today where we were tapping up into. You can see we're already moving up higher, and that's kind of what I don't like. And then for Dow Jones, same thing really. We're already bouncing off of the 4-hour confluence. 1-hour confluence, we had that 1-hour order block still holding from the commentary. Clean, clear, order block holding, and then for, the later on sessions, push us up higher. And then on the 15, we didn't really form anything too clean. We just formed this for like we were chopping inside of it, and then we went up higher. And then for gold, we had that 4-hour buy side imbalance, this whole buy side imbalance being respected, the 1-hour buy side imbalance right here being respected to the tick. Then we also had a daily bearish inversion for value gap. We have our lower time frame entry model, and then we scale down to like the 3-minute here, and we find our entry model there. Or you can just go on the 5-minute. You can enter on the 5-minute too, 5-minute buy side imbalance, stop at the low. But I used the 3-minute here. This is kind of where it formed more quickly on the 3-minute. You see that here we had the bullish inversion for value gap form, retrace, formed the breaker here. As soon as we close above, we retraced. We weren't really moving with speed. That's kind of why I just didn't. And then we had 10 a.m. news, and you can see the news pushes up higher. Wasn't really waiting for the news. I was actually going to close or move my stop to break even at the news event, and I think I should have just done that instead of just moving the stop as soon as possible. And then as soon as we got this right here, this candle go higher, we tapped up into a 15-minute sell side imbalance. That's kind of where I moved the stop to break even. So as soon as we tapped up into it right here, I moved my stop to break even. It was around here, the entry was somewhere around here at this fair value gap below. That's where we entered, and then you can see we came back, retraced, stopped us out, and then we started to move higher after that. For this month has been the delivery, honestly. Sometimes we move the stop to break even. That's like my third trade, moving my stop to break even, getting hit break even, and then the trade runs in our direction and hits our profit target and meets our objective, and there's something I'm going to work on a lot more this month. Last month we didn't really have that, even though we were doing the same thing really last month. We were moving the stop to break even a lot more quickly, but I feel like we just didn't, again, stick to the 3 PDRA rule on the 3-minute. So if we were being logical here, this is where our first PDRA is going to be the fair value gap. The third one would have to be this order block, which never formed until we got a closure above it, and then we had a sweep though. So we had another one form, we had a sweep, a lower time frame breaker form, and we didn't really have an inversion here, but we had a lower time frame breaker form, and then we went up higher, and that should have been where we probably would have moved the stop to break even. So yeah, probably there would have been the best scenario after we have the breaker form, because you just don't really see the market coming back down. You see it reaching your standard deviation targets. With this trade too, the risk was kind of excessive. That's kind of why I had to move the stop to break even a little bit more quickly. And then yeah, I was risking way too much. It was like my original stop loss down here on the 3-minute low, or here, this one was around 4%, and I put 1%, 299 of a stop loss. I put that 1%. Everything was correct on the Lighthouse calculator. It just didn't, calculate it correctly, and it told me to risk 0.5, and then the stop loss was originally like 4% of a stop loss. So that's kind of why I was becoming a little bit irrational and emotional, because I just don't want to lose the whole account in one bad trade. Even though the trade was super clean, I just didn't feel totally comfortable risking that much. So that's kind of why I had to move it a little bit more quickly. I think we should have been a little bit more logical, should have down the risk a little bit, should have been trimming here. As soon as we started moving up higher, started trimming, and then leaving the stop loss down there, honestly. And that would have been hopefully next week is a little bit better. Next week we don't really have much of a news event. We only have basically 12 on Monday, 8:30 on Tuesday, and then nothing really on Wednesday, but I will be watching GPB. And then of course, and then Thursday we don't have much except for 8:30 and 8:45, and then Friday nothing really for New York AM session, just for GPB. This week has been one of the worst weeks, I should say. Not the best, one of the worst weeks. You can see we're just down 1% here, we're down 4%, and then we're at break even. So that is around like 5% in a whole week, basically trimming away the 1% right here we had, then the 2% we had right there. It was like 0.5 up here, and then 1.5, and then we trimmed it with 5%, and now we're down 3. Yeah, just reviewing the mistakes for today, or this whole week, and today. It's really learning from this experience. Again, majority of the time when this happens, usually during like later throughout the week. Like last month on the account, we had this happen on Thursday. So again, here you can see it. It was, the meltdown happened throughout the end, towards like the end of the week on Thursday. Same thing here from the previous week right now, or this week right now, it happened the same thing. Thursday we had a meltdown, and usually whenever that happens is usually throughout Thursday and Friday. It's usually one of those weeks where we don't really have too much volume. So I'm gonna go here, show you guys the economic calendar from the 17th through the 21st, and then Thursday we had some high impact news, and then Friday we had majority of the news. And this usually happens again whenever we don't have much news throughout the beginning of the week, and then towards like later throughout the week we have a bunch of news. It's really just like not taking trades during like the beginning of the week that really forces us to force something towards the end of the week, because we want to have a trade form have that one good trade for the week and take something. We want to take something home for the week, but forcing that expectation to have a trade for the week, that's kind of what's been happening a lot more during these meltdown weeks that I'm starting to see. Really just gonna try to get out of this drawdown, really trying to just work my way back up, and then eventually learn from these mistakes, honestly, and continue to review. Honestly, this whole week we haven't really been reviewing as much, the whole trades like we did last week and like doing the trading homework, but I have been charting, have been journaling, but you just don't review it, honestly, and I feel like that's kind of the downplay, and we don't really watch the trade recaps that we need to. So that's really it, honestly, on this. All right, so this is a statistic that I created from the June month, basically on the phase 1, and then this is currently phase 2 for the July month. Even on the June month we were on phase 2 a little bit, so like towards late June we were on phase 2 already, but nonetheless all the trades we took on June were 10 losses and then 8 wins, and you can see the risk to reward playing out in our favor, and of course the risk management, but as of right now hasn't really been too favorable. I need to update it too. I'll probably update it later today. We had 8 wins and then 10 losses, and some of these were break even, some of these were like the same trade, scaling in, having small losses, and then same thing for this one. But you can see nonetheless the wins were double the losses, and that's kind of what I want to do here. Of course we lost, but we lost like basically around 8% here, and then we won around, I don't even know what is, so we're gonna see here, so it's 18%. We won 18%, and then we lost around 9%. We lost 9%, and then we won 18%. So we won double from what we lost, and I feel like that's a very key factor. Whenever you have risk to reward and you have good risk management and you're able to take the highest quality setup for the day and you're able to control yourself, I feel like that just plays out in your favor a lot more. Following our strategy, following our plan, and the July month, this is only week 2. We still got 2 more weeks to go, and hopefully we're able to pick the pace back up. And that's kind of why I'm just like really not really too worried about the losses. Losses are gonna happen, they're part of the game, but as long as you're able to win and you're able to follow your strategy and it's profitable and you're able to wait, stick to the rules, you're not breaking them, you're gonna be profitable at the end of the day. I feel like we shouldn't have had such big losses. I'm trying to build consistency. I'm trying to tell myself, like if you're able to risk 1%, if your strategy is profitable, why not wait for those high quality setups, taking them, and then chipping away at the profit target. There's nothing, if you're consistent, there isn't a need to hit a one shot one kill, because then how do you know you're consistent? How do you know if you're actually profitable if you only hit a one shot one kill? So that's what I've been trying to tell myself. Like today, I was trying to hit that one shot one kill, even though I was supposed to risk 1%, but it risked a little bit more, and I was willing to take that one shot one kill. But again, I'm really just trying to tell myself, you're gonna get out of this drawdown, you're gonna be you're gonna chip away at the profit target, and you're gonna get out of the drawdown, and you're gonna be profitable. If you are truly consistent and profitable, then you will get out of this, and it's part of the plan. Even if you face heavy drawdown, you will get out of it. You stick to your model, you stick to your plan, you learn from your mistakes, you don't repeat them. I did show last week's trades and we didn't really take much, and this week we did, so I'm gonna have to have journal. I'm gonna have to journal a lot more. This is Monday's trade in Q, and then we took a small 1% loss, as I showed you guys earlier. And on this trade, this is something I'm noticing. If we don't have a 4-hour confluence, we shouldn't be taking trades with these markets in here, especially on CPI week, NFP week, or FOMC week. If we don't have a 4-hour confluence, not taking the trades. That's kind of what I've been noticing. And the 1 hour, we did have this 1 hour confluence, but the market delivery wasn't the best. As you can see here, we had a 15-minute order block. Everything was here, everything was correct, on the 1 hour, and then the 15, the bias, everything was correct. We had a breaker market structure up there, and then on the the 5-minute, we had a 5-minute inversion with the breaker form, and then we just came and wicked down and we got exited out. This trade wasn't bad. It just, again, happened more PDA rates to back us up, being in a deeper discount on the higher time frame. We're too deep into a premium, and having the price like form, from this high to this low, we break it, we don't have anything on the 4 hour, waiting for the retracement, then to look for longs. That's kind of what would have been better. If I had 3 PDA rates, usually I want them to be on the 4 hour, the 1 hour, and the 15, and then of course I scaled down to like the 1 minute or the 5 minute or the 3 minute to look for an entry, and that just didn't happen here. We didn't have a 4 hour confluence backing us up, and especially on a heavy week with heavy news, the market delivery won't always be the best, so you have to make sure you have as much confluence and as much as everything backing you up. And then for USD JPY, we took a long here on Tuesday, and we had a order block and a breaker in our favor. We had a 1 hour buy center balance. So here, this is kind of clean. The main PDA rates I try to use on the higher time frame is going to be a fair value gap and a breaker. If I have an order block, that's nice, but I'd rather prefer a breaker. And then on the 15, we had a 15-minute inversion fair value gap form. Nonetheless, again, the bias was correct. The trade idea was correct. This was a break even also. And then on the 1 minute, we had a 1 minute buy side imbalance form and a breaker. We just entered, and then eventually we got stopped out. Nonetheless, here, this trade was a lot better than the NQ trade, since we did have a 4-hour confluence backing us up. And then on the 1 hour, we had a 1-hour confluence backing us up. And then on the 15 minute confluence. And then on the 1 minute, we had a 1 minute confluence. Here, being more patient, waiting for your original entry to be tapped up into. And then we had our standard deviation targets. And then the 4-hour high we were targeting buy side. It's just very unfortunate. Sometimes the market delivery, again, won't be the best. This week hasn't been the best. This trade right here, everything was aligning perfectly, but just the market delivery wasn't the best. And it's like that sometimes, you know. This is after 10 o'clock, no news events, none of that, you know. On a Tuesday, it just didn't deliver to how I wanted it, and that's totally fine and acceptable. We did trail the stop loss up here, you know, up to this high on the fair value gap. We didn't want to see it, you know, all the way, you know, traded back down, because that's pointless. We want to see the 50%. The breaker, you know, supposed to push us up, leave some parts of the fair value gaps unfilled. Even a breakaway gap right here would have been nice, like this right here, you know, leaving it like halfway unfilled. You can tap up into it and then move higher. And then here we took, again, this is like the worst day on Thursday. We took so many trades. We took 3 trades. After this trade right here, I should have just been out. I should have been the day before, you know, Wednesday. We were moving so much more higher. We weren't really able to catch the move. We were very, you know, like, we're like, all right, we're gonna miss the move, you know, for Thursday. You know, the market is having CPI. We're gonna miss the move. I'm gonna get FOMO, bro. Like, the market's gonna move without me. It's gonna move so much more higher, and that just never happened. On the 4 hour, we had a 4 hour buy side imbalance being tapped up into, and that was on ES here. And then on the 1 hour, we had a 1 hour buy side imbalance being tapped up into. We did also sweep 1 hour sell side liquidity before we started to move higher. And then on the 15, we had a 15 minute buy side imbalance form. And then on here on the 1 minute, we had a 1 minute breaker form, and then we had a 1 minute sell side imbalance form at break even. As soon as we formed this buy side imbalance, I should have not, you know, exited the trade here, because we had a 1 minute sell side imbalance form and then a 1 minute buy side imbalance form with a breaker. Whenever a breaker forms, I want to see speed. I want to see, like, you know, higher delivery. If we're having a bullish breaker and we're bouncing off of these higher time frame PDRAs, we should not come back down and redeliver and rebalance. And that should have been my first signal. Boom, you know, like break even, we have a buy side imbalance and then an inversion. You know, we should tap up into it, then have speed and then fast delivery. That's kind of unfortunate. And we exited right around here, and then eventually we started to chop around, you know, and then we moved lower. We can't control this, you know. We had everything. We had the 4 hour PDRA, 1 hour PDRA, 15 minute PDRA, and then 1 minute PDRA, and it just won't work sometimes. That's kind of why you need to move your stop to break even. And once you have, you know, the market in your favor, the trade in your favor, because sometimes it just won't work. The market won't offer you what you want. You know, you have to be able to adapt. You have to understand where's your next draw on liquidity, where's the market moving to now. You know, the time elements wasn't in check. The market delivery wasn't the best throughout, you know, the whole week. And then for this NQ trade, again, just NQ, this is the first trade right here. We forced on the 4 hour, we had a 4 hour buy side imbalance, 1 hour buy side imbalance, very slim fair value gap. This is something I'm noticing, you know, once you have these very slim fair value gaps, they're not really that prominent in my opinion. You know, use the bigger one, use the one that's in a deeper discount. Why am I entering all the way up here? You know, we should be waiting for a deeper discount to be hit and then looking for longs, you know, if we want to have a good entry. And that should have been my main driver here. And then on the 1 hour time frame, we had a 1 hour buy side imbalance up here. And again, it's very small, slim fair value gap. We did sweep this low, but that we entered before that. And on the 15, we didn't have anything on the 15 other than these two down close candles here. Not very prominent in my opinion. We have yet to tap into these PDRAs on the 4 hour and the 1 hour, entering, you know, not going anything lower than the, you know, the 4 hour and the 1 hour. We shouldn't have been on the 15 or the 1 minute. 1 minute we had a mitigation block form and a buy side imbalance. We entered, we waited for that, and then we got stopped out. Again, we didn't have, you know, the 4 hour and the 1 hour PDRAs being tapped up into, and then we didn't even form a 15-minute confluence. A 15-minute confluence I want to see form is not some little candle for, you know, order blocks, mitigation blocks. I want to see strong displacement. I want to see, you know, internal range here, boom, boom, high to low, or yeah, internal range high to low. We should form a fair value gap, retrace, and then go higher. If we don't have a fair value gap after tapping into like a 4 hour and the 1 hour PDR rate, is not really high confluence to me, in my opinion. And yeah, that was really it for the first one. Again, we entered before 9:30 here, not entering before 9:30, you know, waiting for the 9:30 opening bell, 30 minutes after, you know, seeing what the market is giving us, and then starting to look for trades. And then for the second one was really the same thing. Again, just waiting for your price lag on the 4 hour here to see the bigger fair value gap being reached into a discount, waiting for a higher confluence. 1 hour time frame, we did tap up into this 1 hour buy side imbalance and the 4 hour buy side imbalance here, and we did sweep the low, and then eventually we swept 15-minute lows. I thought we were going to form a breaker. You know, we closed all the way up here. We opened, we went down. We had, you know, the higher time frame sweep, the lower time frame sweep, and we were tapping up into those higher time frame PDRAs. We didn't have a 15-minute fair value gap form. So again, just not taking it. If we don't have a 15-minute fair value gap we're forming, not taking it, because the 15-minute is a key confluence. We should have a key confluence. We shouldn't be looking for a lower time frame sweep. And this is another thing. We had a 1 hour buy side imbalance and a 4 hour buy side imbalance. On the 15, we were looking for a lower time frame sweep for, you know, the smart money universal X standard deviation model. And I realized that isn't high probability, especially on the 4 hour and the 15. we need to have some form of confluence, especially for on the 1 hour. We're looking at the 1 hour buy center balance and we're looking for a 15-minute sweep. We need to have a daily confluence. It isn't high confluence either, you know, on the 4 hour either. We need to have at least 3 PD arrays. It could be the daily 1 hour and then the 15-minute sweep, or it can be, you know, the weekly, the 4 hour and then the 15-minute sweep. We need to have that. Or it could be the daily 4 hour and then a 15-minute sweep. Or it could be, yeah, basically those are the ones. Just wasn't high confluence, honestly. And you can see we had a sweep, breaker form, fair value gap. We entered at the, you know, the breaker, and then we got stopped out. Very low probability trade there, honestly. So just learning from these mistakes, not letting them happen. And again, just entering way too deep into a premium. You know, we feel like we got FOMO here, like throughout the whole day, we got FOMO, you know, we didn't know when to step away, to walk away, giving all our profits back to the market. And that isn't something that's acceptable. And I just need to understand that, honestly. Like later on, you know, if we pass the account, we get funded, I don't want to make the same mistake, you know. I don't want to have this happen any further anymore throughout my trading career. You know, I just want to eliminate this, and I want to prevent this from happening any further, because last month this happened, the same thing. Really, it was really just the emotional drive that was driving me. It wasn't really, you know, the confluences, the charts, you know, it wasn't anything. It was just emotional, irrational, illogical decisions that were just driving me, you know. And then the last trade, which is for today, I'm still yet to chart it, but nonetheless, on the 4 hour, again, we had a 4 hour buy side and balance form clean, the 1 hour buy side and balance form clean, and then on the 4 hour we also see the daily, you know, inversion, bullish inversion that formed, targeting the high, clean, you know, external resistance, you know, buy side, and then the sell side price lag here that formed high confluence. This is a high this trade was high confluence. This is why I put it the heart, even though we hit break even. It's a high confluence trade. We're inside of a discount on the 4 hour price lag. In Q, you know, we were trading all the way up here, you know, that isn't high confluence, and we weren't even hitting the fair value gap. This is something I noticed again. We have a daily 4 hour and a 1 hour PD array. Those are high confluence. Those are super high confluence. They're all overlapping. They're all hitting one another. The market is going to move in your direction with clear intention to move higher. And then on the 1 hour, we had, you know, the 1 hour buy side and balance, 1 hour high we were targeting, and then we had a 4 hour sell side and balance, which we need to make inverse. And then on the 15, we had a 15-minute CB. Again, if a 15-minute price lag isn't like this, I'm not taking it no more, because we need a fair value gap, you know, in a 15-minute price lag. The order block here, you know, order blocks, you know, are clean, they're nice, but I just want a fair value gap on the 15, especially overlapping with the 1 hour or the 4 hour PD array. And then we had the breaker, and then, you know, the standard deviation targets, inversion, fair value gap, 3 minute. This is where we entered right here at the low. We got an entry right there, and then our stop loss was down here. We were risking around too much. That's kind of why I didn't want to hold the position. As soon as we went up, we exited, or we didn't exit, we moved the position to break even, and you see we got stopped out. We formed the lower time frame breaker, and it's very unfortunate, you know, but the delivery wasn't the best, again, because we had 10 a.m. news. After 10 a.m. news came, we started to move higher, clean delivery up. Nonetheless, going to learn from this, you know. Towards the end of the week, we started picking up the pace. On Friday and then Thursday, we just dropped it. We dropped the ball. Weren't really the best, honestly. You know, Thursday's the day where I need a review. You know, the trade in the beginning of the week wasn't bad. Again, just the 4 hour confluence would have been a little bit better. Just waiting for your premium price lag to form on the 4 hour to retrace into that fair value gap. And if you don't ever get a retracement, just wait. This one right here, we had a 4 hour confluence, 1 hour confluence, 15-minute confluence, and then on the 1 minute, we had a clear intention of where we wanted to enter, but we didn't wait. Just being more patient, waiting for that, and then we probably would have got stopped out. You know, you can't really control the market delivery. Nonetheless, it did reach the target later on, but hopefully, you know, we're able to overcome this, pass the account, learn from our mistakes, and never ever repeat them again, or just avoid them from happening any further and causing any more damage later on. That's all I plan on doing for today. Reviewing my mistakes, learning from this week, reviewing my trading recaps, probably doing some trading homework here and there, you know, probably doing, you know, the high and low of the week. And then for Dixie, that's really it. And then for GU, that's the only 2 markets I have left. The high and low of the day for the rest of the other markets, and review my trade recaps and all that, and review my trades as much as possible, just for going into next week, seeing how the market is going to move next week, just tape reading, finishing, charting, all that. So I'll update you guys next week. Peace.